If you own Meta stock, you need to watch this video. Snap just reported earnings. It's down almost 25% after posting earnings. I'm gonna talk about why, and I'm gonna talk about what this might mean for Meta. I own shares. I'm gonna tell you if I'm thinking about buying more, selling, what I'm gonna do, because Meta is also down 5% based off of Snap's report. All right, let's talk about exactly why. So Snap came in, they said non-GAAP earnings per share of 8 cents. That beat by 9 cents, okay? But revenue, which is more important because you can do funky things with earnings, right? Revenue of 1.13 billion misses by 10 million. That doesn't sound that bad. I mean, the miss is bad because they already brought expectations down. What's worse? What's the worst thing? And the reason for this major reaction is that management said, given uncertainties related to the operating environment, we are not providing our expectations for revenue or adjusted EBITDA for the fourth quarter of 2022. But then this craziness, the board of directors authorized stock repurchase program of up to 500 million of its Class A. So when companies do buybacks, that can be seen as a good thing. That can be seen as bullish. They're going to have less shares outstanding, meaning automatically, even without more revenue or without more earnings per share for a company, if you decrease shares, if you buy back shares, the EPS goes up, the earnings per share goes up, which is a good thing. When a company does buybacks, it's a signal that they don't have anything better to do with that money. And so what Snap is saying right now, in a case where they're not able to grow revenue strong, they're not able to grow earnings strong, there's a problem with user growth, in my opinion, a lack of innovation. They're instituting this buyback, and the company's not even profitable on a GAAP basis, on a generally accepted accounting principles basis. They are not profitable. And when that's the case, I don't think that they should be doing a buyback, but that's just me. I don't own shares and I'm not planning to. Anyways, revenues were up about 6% year over year. Again, that was a miss. Their daily active users were 363 million in the third quarter, which was an increase of 57 million, so up 19%. That's actually kind of nice year over year. Daily active users increased sequentially year over year in each North America, Europe, and the rest of the world. And then we talked about the rest, right? Okay, so Meta is down 4%, 4.5%, and they report earnings next week, right? So the question is, should we be scared if we're investing in Meta? Should we be scared of the same thing happening? The way I'm thinking about it is, yes, it's certainly possible that Meta could miss earnings. They might even say that they can't guide to next quarter. I think that's less likely, but it's possible due to the macro uncertainty. But I'm not invested in Meta for this quarter or next quarter or even the next 6 months or year. I am invested in Meta for the long term. Furthermore, Meta is actually in a much better position, in my opinion, to sustain a downturn. And they are investing for innovation. They're trying to grow into new things, AR, VR, Oculus, the metaverse, that type of thing, which I think is a good bet. A lot of people don't agree, and that's fine. But let's also talk about it from a profitability perspective. We'll look at a GAAP PE, right? Generally accepted accounting principles. Again, is the business profitable or not? We can see right here, Meta is at a GAAP PE of 13.6. Google's also really interesting at 19.4. I mean, super interesting opportunity to buy Google in my opinion. But we've got it compared to Pins and Snap, right? Snap and Pins on a forward basis are not GAAP profitable. Already we're seeing the difference right there between the two companies, right? And really on any of these metrics, right? EV to sales, EV to EBITDA, price to book, price to cash flow, Meta, and even Google come in way better in a way better, more undervalued than something like Snap. And if the growth is gone, if the growth potential is not there for Snap, then no one's going to accept the unprofitability, and that takes away the reason for then the upside from that unprofitability that they're investing. So there's just no good reason to own Snap for a lot of people. Now, sure, if we look at revenue growth, Snap is growing revenue faster than both Meta and Google. But they have so much more revenue than Snap that it's not even the discussion. That's not even a rational discussion to have, right? Coming down to gross profit margin. Again, the growth is gone for Snap. They're having trouble. Their gross profit margin is 61% compared to Meta at 80%, Google at 56%. Why would somebody own Snap at this point with the struggling growth story when they can own, something better, Meta and Google, if they wanted exposure to advertising and social media type things? Every investment is not an investment in something else. And so everybody's decision right now has to be why own Snap, right? And then we can see over its entire history, Snap is actually in the negative. Meta is actually down 23% over the past 5 years, so not great. But if we look at 10 years, still up 600% and still outperforming Google over the past 10 years, at least according to this, which is pretty interesting. And if we look even at the balance sheet, right, Snap's got 4.87 billion in cash. debt of 4.2 billion. So that's a net debt of negative 667 million, but total debt to equity is 122%. Whereas Meta, 40 billion in cash, 16 billion in debt. So a negative 23 billion debt, meaning they have more cash than debt, but the debt to equity is 13%, and where Google is at 11%. So again, in my opinion, if the growth is gone from Snap and there's questions about the business, there's just no reason to own Snap. With that being said, Meta is a much stronger balance sheet, much stronger business. So although they're gonna struggle for the next few quarters, and they have been struggling, the stability in the business is there, and there's the upside there. So I'm not doing anything with my shares. I am considering Google, though. It's a really interesting, especially as everything comes down. And we'll do a quick portfolio update. I always share my portfolio here very transparently. If you like that, do me a favor, like the video and subscribe to this channel so you don't miss these updates. But I've got $103,000. So if you've been watching, we broke 100,000. It'll probably go under that at some point with the way the market is. But hey, we're up past 103,000. We're up 3,000 on the week, so about 3% all time. So this started February 15th. I have put in $118,433, and we're down 15,000. So we're about 10-15%. If we go 15% to the positive, we will be in the green all time. This is a long-term portfolio, so I'm not concerned with 6 months or a year. I just like to share this all transparently and share what I'm doing. Let's see the positions that are up the most over the last week. Shopify's up 13%, Snowflake's up 11%, The Trade Desk's up 7.6%, Cloudflare's up 7.5%, Mongo Database, and you can see everything else from here. Tesla's down after their earnings, which I'll do a video on Tesla, so make sure you subscribe and hit the notification so you don't miss that.